Well, looks like we had some technical difficulties, but I think we're good now. Hopefully, everybody's doing well on this Friday. Uh, I want to talk about ownership, residential real estate. You know, that's what we do over here. And per the thumbnail, I want to talk about what's necessary. What's necessary to own a home? Why? Because I'm inundated with questions that people have that pertain to everything other than what it really takes to successfully own a home or even invest any type of real estate on the residential tip. So that's the reason for the video today. So without further ado, I want to get into the two things, in my opinion, that are even more important than the interest rate. And I say that not to be tongue in cheek, but I'm really serious in that interest rates and qualifying for a home have become easier than they ever have been. Okay, it really has. The rubber is really meeting the road with a lot of folks that I'm speaking with, and that are having negative experiences because they don't understand the tax obligation that's associated with the home, nor do they understand the insurance. And if you understand those two things before getting into a home, before buying a home, you will be that much further down the road because you'll understand that taxes and insurance, and I'll throw in the third, HOA fees, are those things that are not fixed, they fluctuate. So I want to start with taxes first and foremost because uh, let's say you purchased a home prior to 2020 and now you're experiencing, in most cases, a increased valuation in your property because of the increase of value that most of us have experienced that have or own real estate. And so if you were a marginal borrower to begin with, meaning you did everything you could just to get into the home, you are dealing with a shock because tax rates are tied to values, regardless of where you are. Even my California folks and things of that nature. Uh, it just depends on when you purchased the home, or in that case, if you refinance, it's going to be readjusted to the new loan amount. So taxes are something that you really need to understand before you buy a home. How do you do that? I think that's an excellent question that you should be asking your realtor to help you determine if that professional is the one that you should operate with. But from your standpoint, what you could do, you could utilize this great thing that we call the internet. And I would look for the tax records, township records, parish records of any address that is in close in proximity to the home or homes that I'm looking at. And I would look to get a worst case scenario picture, meaning folks that don't actually live in the home, so there's no homestead exemption or anything of that nature, for the most recent tax year. You want to make sure that you alleviate or take out of that mix any elderly tax rates because those won't be applicable to you. You want to eliminate any tax exemption that's not going to be applicable to you. Okay? Because as soon as you purchase the home, okay, and the assessors and the powers that be realize that now you're the owner of the home, things are going to change. And a lot of people get surprised because of that fact. So, not saying interest rates aren't important, but once you have come to terms with whatever your principal and interest payment are, especially nowadays, these loans are fixed rate mortgages. those variables aren't going to change for however long you own the property. The variables that can change are the taxes and insurance and the homeowners association. So when you're out after you've been approved, or if you're paying cash and you're ready to take that step, you want to ask your agent, your realtor, what tax rates look like in the area that you're looking to buy. Moreover, if you're buying new construction, that's all more important, not just to have a lender that can properly establish an escrow account for you for what the home is going to assess for, because prior to, it was just taxed on the land or the lot, right? That was there. Now there's a property there. You don't only want to do that, but again, you want to look at the surrounding area at established homes, same square footage, if you will. Try to find some addresses and get a good understanding of what the unimproved, not the unimproved, but what the tax rate would be on a home similar to yours, that the actual homeowner is not the primary, or it's not their primary residence, because that could give you a worst case scenario. And you could go back and get an idea of the tax rates and the increases and things of that nature, because taxes are on the rise. You're paying for it if you're a renter or if you're a homeowner. Okay. So no one is exempt from taxes, right? So that's what I'm saying when I say interest rates are third, fourth down on my list now that I'm a savvy home buyer, because I'm looking at the tax implication. Okay. And I think that's something that you should look at as well. If you guys have any comments or anything, don't hesitate. Any questions, go ahead and let them ride. So the second thing I would say that you need to be cognizant of, first thing is the taxes, right? The second thing is the insurance. I don't know if you guys have been seeing the increases in insurance nationwide. Uh, if you are someone that's looking to buy a home, I would definitely look at insurance rates in the area that I'm looking to buy in, because we live nationwide, and there are some states that have egregious premiums when it comes to home ownership because of disasters and things of that nature. That might determine not only if you could buy, but in my opinion, where you should buy. Okay. And again, that's not the interest rate. Because at the end of the day, you pretty much know what you can afford. Okay. Because the principal and interest portion on 98% of loans that I do, most people, most of us that are in this business that are doing loans are for residential real estate, right? That are on the side, and those rates are fixed. Not a lot of folks doing variable rate loans, adjustable rate arms, things of that nature, unless it's a HELOC. That's kind of common, but that's a different type of product. So property taxes and insurance, homeowners insurance, because this year, I mean, homeowners insurance has blown up. We shopped this year. Okay, we shopped because uh, thank God we've never had to file a claim, but insurance just keeps going up, 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 and up, right? So, what you have to realize when you become an owner of a home, okay, that it's easier to do so, but it's still complicated. And anything worth having has some complexities to it. So, for you that are out there that might be younger, uh, don't think that not doing anything with complexity is going to be beneficial in the long run. That's not what I'm saying. And I am a real estate advocate. I help people secure home loans all the time. And it's just my experience that those that have the best experience and get the most out of owning property are those that are well educated and you know as much as you can. That's the pros and the cons so that you can make the best decision. Because again, if you're barely getting into a property, with the way insurance and taxes are going in some of these areas, you might not need to do that now unless you have a plan of action on if these things happen, how you can handle it. Because not only are taxes and insurance up, but bread, eggs, and whatever else you eat, they're up as well. Gas, it's up across the board, around the board. Okay? So those are the top two, right? Taxes and insurance. But then you have to think about maintenance. Maintenance. I'm just looking around my place. I'm like, well, you know what? It's time to paint all of these linear feet of cedar fencing that I have. Okay? Beautiful to look at and things of that nature. Love to have it. But it requires maintenance. It's out in the weather. You have to take care of it. Okay? So uh, here's something that I've taken from a VA loan, the VA loan process, something that they do very well. And I believe this is one of the reasons they have a very good loan portfolio as far as folks paying back, is because they account for things that a home buyer is going to have. So 14 cents has been the standard. You might want to bump that up, because inflation is up. Depending on where you are, you can be as aggressive as you like, but their mark is 14 cents per square foot. So you take the square footage of your home and you multiply it times 14 cents. So let's say we got a 1,500 square foot home, right? You guys see that? 1,500. And we're going to multiply it times 14 cents. So the concept is $210 that I'm putting aside every month. Okay? 210. That's for maintenance purposes. So that when maintenance has to happen, I've allocated for that line item, whatever it is. In this case, in my example, I said a cedar fence. Okay? Got to power wash it. Got to stain it. Okay? And I'm probably going to pay somebody to do it. You see what I'm saying? So, regardless, if you pay somebody or if you do it, your time is there's a dollar amount associated to it. That the supplies, things of that nature. But if you're looking to buy a home and you don't want to take care of a cedar fence, well, maybe you want to make sure you don't buy a home where those things are uh, common, right? You have to know what it is that you want. I talked with one of my uh, customers this week, an applicant, and I'm like, hey, man, the realtor only knows what you tell them. What are you looking for in a home, right? You guys have to know what it is, and then the numbers will dictate the numbers, the location, the taxes, the insurance, all those things will dictate your income, will dictate if you could get all of those things or if you need to make some concessions. But at the end of the day, you have to know what it is that you like. I digress. Maintenance, 14 cents per square foot. Okay? So taxes, insurance, maintenance. Let's talk about one that we all take for granted, and that's your time, your time. I appreciate every time you watch one of these videos or any of the information that we put out, because you're giving your most valuable resource, your time, because once you spend it, you cannot get it back. Okay? But owning a home, not only does it take time to maintain it, you might have to shop for insurances when insurances go up. Shop for somebody to fix something for you, right? But it takes time, long time too, for it to really manifest for you as a financial benefit. Even if there's no appreciation, okay? Example, say you pay for a house, you get to that point in life where maybe you have to go live with a child or something of that nature. Maybe that home didn't appreciate in value dramatically, but you maintained it, you kept it, and somebody needs a place for shelter. Well, now you can rent that place out, right? It's value, but it took time, however long that time continuum was, for you to pay that home off. So now it's an asset to you, right? Where it can help you supplement your income. Or you may have purchased in an area where there is a lot of appreciation and things of that nature, right? But my point is, real estate takes time. That's another component that's more important than the interest rate. Because if you're making enough money, or if we plan, I could show you how to save more money on a 7% interest rate loan than on a 3%. If you have the money, the will, and the discipline to do so. Okay? But taxes and insurance are things that we never think about. Okay? And you guys check me if I'm wrong. In some of these states where insurance is going through the roof, they can take money from you for 15 years and then just say, hey, peace, I'm out. Right? So again, on this channel, what we aim to do is educate you so that you can make the best decision. And it's not always interest rate or get the dopamine and endorphins up. Oh, I bought a home. Now what? You should never go into a property without any reserves. Okay? You should never go into the property without knowing that, hey, I can take in a set amount of money each month. Robert told me to take 14 cents, multiply it times my square footage. And if I could put this money to the side, I'll be that more further along the road when the water heater needs adjusting, when I need a roof, whenever, whatever happens. And then worst case scenario, nothing happens. I trade up, I sell this home, and then, I got $40,000, $50,000 that I have for a maintenance fund that could help me go into the next property. That's ownership, okay? That's being a successful property owner, maintaining the property so you can pass it on. How many of you have seen or heard a story of a family, big mama's house, grandmother's house, right? Mama or papa's house, depending on where you're from, and they just lived in it, and the thing is in shambles. They pass on, and then the heirs, it's more of a problem than anything. You don't have anything, and then you end up selling it to an investor, a wholesaler, comes in and takes all your money, right? You got to maintain the property. Just giving you guys some examples of how easy it is now to get into a home, but it's not simple. It's complicated. Everything worth having is complicated, okay? So I think, did I hit them all? Yeah, maintenance, insurance, uh, taxes, your time, and utilities. Guys, stuff is up, okay? And there's only a couple of things you could do. And one of the things you can't do for a long is sit and cry and lament about what prices were in 2000, because we're not going back to 2000. Okay, stuff is up. So you either increase your income, decrease your expenses. Out of those two, which one do you think you have more control over and you can affect immediately? Hopefully you say, hey, I can affect my income and increase my income. God bless you. Kudos to you, right? Do that. But for sure, you can be very efficient, a good steward, if you will, over your expenses. That's an immediate return. Okay. And when it comes to owning a home, right, one thing that people don't realize is your utilities. Again, another great question that a realtor, in my opinion, should be able to answer or direct you towards. Hey, what are the utilities of this particular home over the last year or so? If I was listing a house, that's something that I think I would put in there. Hey, the gas, the electricity, or if it's either or, the water. You see what I'm saying? These are the types of things that are going to be ongoing expenses that you don't think about when you're in the euphoria of, hey, I bought a home, which is a very excitable and warranted time to celebrate. It's a big accomplishment. But then you got to get into the steady eddy, the everyday. Okay? And again, principal and interest on 98% of these loans are fixed. That's not changing. But the taxes, the insurance, right? The time that you need to put in, okay? And the utilities, what are they? Those things are variable. They go up and down. So going into it, if you understand the full matter, you're not going to have this remorse that people are going to have. And knowing those numbers will help you purchase in the right price range. Just because I tell you, hey, your numbers say you can go up to 500,000, do you know what that means as far as the nuances, the taxes, the insurance, the time, and or if you don't want to do it yourself, you're going to pay for somebody to do it. The maintenance, right? That you have to prepare yourself so when something happens, you can fix it. It's like these folks buying these foreign and exotic cars, and then you want to take it to O'Reilly's. You don't need their car, right? You have to understand. I can upkeep. That's a part of the maintenance, right? $1,200 is that's part of the course on some of these oil changes. I got to go to the dealership. You see, because that's what I bought into. If you understand it, right? So those are things that I want you guys to think about when you get on the road to saying, hey, I want to purchase a home, because ownership is necessary. It is. It's necessary, and it'll be a blessing to you when done the right way. And as always, if we could be of assistance on one of these platforms that you're watching on, shoot me a direct message. Check the link in the bio, all that stuff, right? You can reach out, schedule a consultation, and we can have a conversation. And if it's not me, again, ask the realtor, hey, what are the taxes look like in this area, okay, that I'm looking to buy in over the last 5 years on a property that has been established that does not have a bunch of exemptions that aren't applicable to me. Oh, well, I can't tell you that. Well, then you need to find another professional because they can tell you that. Great interview question. Okay. Uh, what do the utilities look like? They should be able to give you a ballpark or point you towards a resource so you can get an idea of what that looks like. What does the HOA? That's the one I forgot. You guys got to start reading the CC and Rs. If you're going into a planned unit development, what can you or can't you do? What do they expect of you? If you live where I live, you can't do a whole lot of stuff, right? And you have to keep and maintain a standard, right? We'll have no, you can't just do a lot of stuff. So all these things are very important that I don't hear a lot of folks talking about. But then you get into it, right? Then you call me and say, what can I do? Nothing. You got to make that payment or sell it, right? So let's measure 15 times, cut once. And if you understand these things, I guarantee it'll allow you to determine if you should be a homeowner or not, because everybody shouldn't be. You heard it here first. But for those that do want to be a homeowner, you can actually be a homeowner and enjoy your home. As one of my guests said a week or so ago on the home show, Mr. Kamari Ellis, aka the Finance Rebel, owning a home is about the memories, man, and the family that you could build. And while you're doing that, though, the maintenance, the mechanics of it, if you understand everything and you haven't gotten in over your head, that kind of it's just in the background and it's taking care of itself. And you're enjoying your family and the memories and things of that nature you're making. And next thing you know, you look up and man, you got this asset or you've built over a period of time. TIME. Some of you guys, man, this is not the stock market. Okay. Long term, long term, long term. So hopefully that makes sense. That's what I wanted to speak with you about. Before I go, I did want to show you one other thing that popped up today. So I want to talk to you about it. And again, no shade or disrespect to anybody, but if you're out here helping people purchase and or borrow money, let's step the game up, man. Let's start educating these folks so that all of this buyer's remorse that I'm hearing about is not out here because they understood. Now, after doing that, and they still, we got some that are gonna, misrepresent. But for the most part, our folks aren't like that, right? They just don't know these things because everybody's trying to get to the closing table. Okay. So now, before I go, this is another thing that popped up just today, and I'll show it to you like this. This is one of the state of Texas's down payments assistance programs, and it's the TDHCA, right? TDHCA, Texas Department of Housing and Community Affairs, I believe. That's the acronym. But for 2024, there are some new overlays. I'll be quick. For the My First and the My Choice down payment assistance programs, right? There's new DTI, that stands for debt to income overlays, as well as payment increase overlays. Okay. The DTI overlays are as follows: anything up to 45%. Okay. There are no reserve requirements. Okay. Anything from 45.01% to 50%. And now this is the maximum DTI you can have. Before there was none. You have to have a 3-month reserve, 3 months of your principal, interest, tax, and insurance payment, right? So what that means is, and this is very important just going forward, because I'm starting to see this a lot with just a lot of different programs. The reserve requirement and putting limits on your debt to income ratio. And when I'm talking about the debt to income ratios, I'm talking about what we would say your back end ratio. And that's simply your gross income via either your W 2 gross income, or if you're self employed or something of that nature, the income that we have determined is your gross income. That's the gross. And you take the proposed house payment and all of your monthly obligations, the minimum monthly payments, divided into that number. That's how you get the DTI, right? But I'm seeing this a lot to where, hey, we have minimum and maximum debt to income ratios. And then if you exceed that up until a certain threshold, you have to have reserves. That's what we just talked about. Okay. Putting that money to the side, because guess what? Stuff's going to happen. Okay. If you got a tax return, God bless you. But if you have high interest rate debt and things of that nature, pay that off. That's an immediate return for some of you guys, anywhere between 15 and 30%, right? Pay those things off. That'll be better spent for you. But please don't get into a house and deplete everything that you have, okay? Because the program I'm speaking of here, that's a down payment assistance program with FHA. If you can qualify for it, right, you can get in and feel like everything will be all right. But again, you have to deal with those factors that we just spoke about. You know what? Let me check here. Y'all give me a second. See if we got anybody on the tubes, because I know it's early and probably a lot of you guys are at work. So I do that on purpose so I don't get in here too long, because as you can see, I don't need no help talking, but I just want to put the information out there, right? So yeah. So anyway, let's see. Did that time out on me? Okay. So yeah, like I was saying, 3 months reserves for the principal, interest, taxes, and insurance payment if your DTI is between 45.1 to 50% max. And this is for the Texas Department of Housing Corporation, Texas Department of Housing and Community Affairs, the My First and the My Choice down payment assistance programs. Okay. Moreover, there's a payment increase of one, not payment, but a rent. If you have a increase from your rent, that's 1.5 times greater, right? Then you also have to have a 3-month reserve cushion. And let me state that differently. If your proposed house payment, okay, is going to increase 1.5 times of your rent. So let's say I was uh, paying rent for $1,000, right? Half of that is 5. So the new house payment, if it exceeds $1,500, then it's saying that I need to have a reserve requirement. Just look at the principle that's at play. Okay. So reserves are always a good thing. We call those compensating factors. You can never have too many compensating factors. Okay. You can never have too much cash or liquid money, stuff that you can liquidate. Cash is king at the end of the day. So keep that in mind. And the reason I was bringing that up is because I had somebody call me today and their lender of choice did not know the new guidelines. They're under contract. They've already paid for their appraisal, and now they don't qualify. Don't be that person, okay? We got to quit being in a state of delusion in 2024. With all this information out here, with all of our getting, let's get an understanding that everything that quacks ain't a duck. Okay, do your due diligence. How? Go back and look at some of these videos and things of that nature that folks are putting out here, and do this. Watch them with your eyes closed. Don't get caught up in the B-roll. Okay, what's the B-roll? The pretty people and the movie star backgrounds and all the cars and the vacations and things of that nature, because that's not why you went there. You went there to find out how to secure one of the largest financial transactions that you might enter into as an adult. So you're wanting to know, do they have the ability, the acumen, the ability to articulate, to simplify, make it less complicated, okay? It's already easy. The application, all that's easy, but can they make all of these nuances less complicated that I can understand it so that I can make the best decision? Not tell me what I want to hear, but help me understand so that I can make the best decision, because these things are very, very serious. So that's it, man. I'm getting better on time. How long have I been going? I ain't been going that long. Yeah, 31 minutes. That's plenty of time. You guys have a great weekend. Be good to one another. Let grace abound. And y'all willing, I'll get to speak to you again. Peace. Y'all be blessed.